I was going to say, do you have anything in premium bonds? I sold all mine at roughly the start of the year and bunged it all into Realty Income, which I'm actually reasonably pleased about. It's going quite well. I've managed to kind of grow that a little bit. That, by the way, is one of my few stocks that's up today. Any idea why?
No idea.
Me either. I haven't looked, but I know it was the day that the dividend got paid today for people who actually get the dividend on the day that it's paid. So I wonder whether there was a big old auto invest on that's helping create some buying volume.
Makes sense. I guess that is kind of what you do with the Realty Income dividend, isn't it?
Basically, yes, as far as I can tell. I mean, you need to think it's kind of trading at a really, really strange valuation to not be worth doing that.
Yes, they also hiked the dividend last night, I believe. I think they hiked it by about was it 0.2 or 0.02? I seem to remember it being a very small hike, but they do pay monthly, I guess.
It was a very small hike. They tend to hike quarterly. They pay monthly. Those hikes are getting smaller and smaller and smaller. I was looking at the stock earlier today and having seen the rate it's been growing its dividend at. This is a really good example, by the way, of a company that's going to get negatively affected by rising interest rates. I still think it's worth buying at these levels. But the case with them is they have to try and basically work out a kind of spread between acquiring new things and the rate they'll have to pay on the debt for that, because they'll do it by issuing bonds in most cases, versus the rate they're going to get coming back in the other way. And it's basically a spread business. I'm going to take on debt at 5% and I'm going to get a 6% return by these things coming out, so I make 1%, more or less. That's pretty much the shape of their most recent thing, actually, when they had a bond issuance. It's going out at 5, it's getting sent on stuff that will bring in revenue at 6, or return, sorry, at 6. That, of course, depends on them actually getting that return and their tenants not going bust. They tend to be pretty good at that, for what it's worth. Their occupancy numbers tend to be very, very high, and they tend to have very, very good rent collection stats, with one notable exception recently. But, Steve?
Yeah, I was just going to say their record is very, very good, even through COVID. You would say that they still perform better than probably the vast majority of REITs in that kind of space. And then they've spun out their office arm, or some of their office arm, which lowered the risk of the risk of the reason I sold it is that I just thought that I didn't think we would return to work as fast as we had. I thought there'd be a lot more work from home, which I did see an interesting stat on. The CEO of LinkedIn tweeted out, I think it was that 14% of all jobs now that get posted on LinkedIn have remote work listed in the thing, and those 14% receive 50% of all applications. So there's obviously still a massive desire for people to remote work, and that was my fear. But I think we've been dragged back to the office, I think, kicking and screaming, and this will be a forgotten sort of small period of our lives. But that was my big worry with Realty Income, that I saw this trend that they were at the forefront of, and they smartly span out, the part of their business that was the big worry. Yeah,
I think I was looking at them over the last 10 years. They've managed about a 13% annual return, which you would take from pretty much anything, in terms of a combination of if you reinvested the dividends you'd received and the share price movements and so on and so forth. I don't think that's going to continue, for what it's worth. I'm not expecting a 13% return going forward from Realty at all, partly because they're a much, much bigger company now than they were before. Their revenues are a lot higher. It's going to be hard to just add incremental rent at that kind of level. Increasing interest rates, I think, will make growth harder. I still think it's a very good option here, for what it's worth. I tend to be of a view that kind of slow and steady and gradual outperformance will get us to somewhere decent in a kind of Buffett style.